NVIDIA, the ultimate judge of the global capital markets, has released its financial results for the fourth quarter of fiscal year 2026. In the 24 hours leading up to the report, traders across America hardly slept. Why? Because NVIDIA is no longer just an ordinary semiconductor company. It is the master valve for global AI computing power. After staring at the screen and reviewing the entire 40-page original document, I have reached a conclusion. NVIDIA is undergoing a violent transformation from selling components to controlling global, sovereign AI computing power. Hello everyone, I am Howard Miller. In today's video, I will tear open this original financial report and select the 10 most critical original screenshots. Whether you are a shareholder holding NVIDIA or an investor on the sidelines, you absolutely cannot miss these next 10 images. 1. First, let's look at this core income statement. Howard believes that NVIDIA is no longer a simple hardware company, but a high-efficiency, net profit harvesting machine. Quarterly revenue reached $68.1 billion, up 73% year-over-year, while net income hit a staggering $42.9 billion. What does this mean? It means for every $100 NVIDIA sells, after deducting all costs, taxes, and R&D, it nets $63 in profit. In the history of human commerce, you can hardly find a company of this scale capable of maintaining such terrifying profit efficiency. This isn't a bubble. This is absolute computing hegemony. Look at the second image. This is the lifeline for measuring industry discourse power. NVIDIA's gross margin for this quarter stood firm at 75%. For comparison, the traditional chip giant Intel only had about 60% during its peak. A 75% gross margin tells us, even if TSMC raises prices or logistics costs double, NVIDIA only needs to flick its finger to raise prices, and the downstream cloud giants will have no choice but to pay up. My view is that as long as this number doesn't drop below 70%, NVIDIA's logic remains indestructible. This chart reveals NVIDIA's engine of growth. Data center revenue reached $62.3 billion, accounting for 91% of total income. This time last year, that number was $18.4 billion. In just 1 year, it grew 3-4 times. This directly answers the market's doubt. Has AI demand weakened? The answer is absolutely not. Current growth has shifted from simple large model training to large-scale inference, and this shift is the key to the sustained explosion of the data center. Many people were worried that the Blackwell architecture would be delayed. Look at the original words from the CFO's commentary. The report confirms that Blackwell has entered the full mass production stage. My analysis is that Blackwell isn't just a performance boost. Its architecture-level interconnectivity achieved through NVLink drastically reduces the computing cost per rack. This has led customers to undergo a Dimensionality-Reduction upgrade. They would rather wait for Blackwell than buy more Han hundreds. This rhythm of product iteration is NVIDIA's core competitive advantage in shaking off AMD. This is the chart I want everyone to see the most, and it's also the one most bloggers overlook. Networking, $11 billion in revenue, up to 163% year-over-year. NVIDIA now sells more than just CPUs. It sells Spectrum-X Ethernet and InfiniBand. My point is, NVIDIA is turning the data center into one giant integrated computer. If you buy my chips, you must buy my network cards and switches. The income brought by this ecological lock-in has already made it one of the largest networking equipment providers in the world. Please focus on the mention of sovereign AI in this image. It contributed over $30 billion for the full fiscal year. This is not just a number. It is the most strategically significant growth point in NVIDIA's entire report. This validates my earlier core point. The demand side of AI has undergone a dimensionality-reduction qualitative change. In the past, NVIDIA sold chips to internet giants like Microsoft and Meta for model training. But now, governments from Saudi Arabia, the UAE, the UK, and even Southeast Asia have entered the arena. These sovereign nations realize that computing power is the digital oil of the 21st century, and they cannot leave their national lifeblood entirely in the hands of a few American cloud providers. To judge if an empire is stable, you can't just look at how much it earns. You have to see how much it keeps and if it's willing to pay it out. Look at this cash flow statement. NVIDIA returned a staggering $41.1 billion to shareholders this year. Although NVIDIA's dividend yield looks minuscule compared to its current stock price, the key lies in those tens of billions in stock buybacks. This sends to extremely strong signals to the market. First, management believes its stock price is still undervalued at current levels, or rather, they have absolute confidence in the future Blackwell and Rubin architectures. Second, NVIDIA's cash flow has become so powerful that they can't spend it all. For this chart, we need to talk about risk, other side of the coin I mentioned earlier. Please look at the labels for inventory and prepayments. Inventory levels are continuing to climb, reflecting the massive material backlog and stocking pressure NVIDIA faces in the early stages of full Blackwell production. More importantly, NVIDIA has paid massive prepayments to suppliers like TSMC to lock in capacity. This proves my point. Currently, NVIDIA's biggest enemy isn't AMD, but the physical limits of the supply chain. This is the most mind-blowing chart in the entire report. The guidance for the first quarter of fiscal year 2027. NVIDIA gave a revenue outlook of $78 billion. You might not have a concept of this number. The most optimistic analysts on the market previously only dared to guess around $72 billion. With one wave of his hand, Jensen Huang pushed the ceiling up another level. This means, in the coming months of 2026, NVIDIA's average monthly revenue will approach $26 billion. What kind of concept is this? This is equivalent to NVIDIA earning the original acquisition price of Twitter every 3 weeks. This growth slope is almost unique in the history of human commerce. It tells us that Blackwell orders aren't just okay. They are more than we can handle. As long as the guidance on this page can be fulfilled, all overvaluation theories will appear weak in the face of absolute earnings growth. Finally, we must return to a level of rationality. This chart shows NVIDIA's current divided by E ratio. Despite their explosive performance, its valuation multiple remains in a historically high range, far above the S&P 500 average. My concluding view remains the same. NVIDIA is no longer selling hardware. It is selling the digital oil and computing tax of this era. If you ask me if a 5 trillion market cap is the peak, I would tell you, looking at market cap is meaningless. You have to look at its ecological stickiness, fact that once you use its system, you can never leave. From this report, NVIDIA has opened a new continent through sovereign AI and locked in old territory through its networking business. For long-term investors, as long as its guidance is still moving upward, the logic hasn't broken. I am Howard Miller, and these are the 10 core original financial report images I've broken down for you. After seeing these, do you think NVIDIA is a myth or a bubble? Welcome to discuss in the comments. Don't forget to like and subscribe. See you next time.